Welcome to your weekly recap. It's Friday, April 13, 2026, and we're officially 25% of the way through 2026, while the world watches four humans break Earth's orbit for the first time in 50 years. The market back home are struggling between a long war that's keeping oil stubborn at $110 a barrel and OpenAI admitting that its hyper-realistic video might just be too expensive for the current economy. On today's show, we're talking about the S&P 500, the death of Sora, space fever, Nike's stumble, Anthropic's big oops moment on GitHub, and why Boeing is pivoting from planes to missiles. If you were hoping the S&P 500 would finally catch a spring breeze, the current index is doing its best impression of we'll be all right. We're coming off a 4.6% slide in the first quarter, and while we've seen a few dead cats bounce and rumors of de-escalation, the reality that sinks in is that this conflict in the Middle East isn't ending as fast as the market expected. The biggest anchor dragging the S&P 500 right now is the Strait of Hormuz. While shipping through the narrow corridors is still a near standstill, we've been seeing crude fetching around $110 a barrel. For the stock market, oil isn't just at what you pay at the pump. Higher oil prices means higher shipping costs, which translates to higher prices for everything from iPhones to avocados. As long as inflation costs keep rising, inflation remains sticky. Those interest cuts that investors were dreaming of for 2026 are staying firmly on the shelf for next year. We're currently sitting at about 6% off of January's all-time highs, and we might see a correction that might even drop it to 10% off of its all-time highs. What makes this week feel different, though, is its persistence. Usually markets freak out for a week and then move on. But because the war has dragged on for its second full month, the uncertainty has turned into expectation. Even the high-flying AI sector, which spent most of the year being bulletproof, is starting to feel the heat from the energy-intensive data centers that their bills are probably going to skyrocket. In a move that caught off Hollywood, and apparently Disney as well, AI has officially pulled the plug on Sora. This is a two-stage that is going on its way. The web and app versions are going dark on April 26, 2026, with the API following suit in September. So why did they kill the most hyped AI video tool in history after only 6 months being in the wild? Well, it comes down to two things, the burn and the cost. Reports suggest that Sora was burning between $1 million and $15 million a day in computing costs. In the same window, it reportedly brought in a grand total of $2.1 million. And Wall Street doesn't like that math. And remember the massive $1 billion partnership between OpenAI and Disney? Well, that's officially deleted. Rumors have it that the mouse was notified less than 1 hour before the public announcement. And it's a stark reminder that even billion-dollar handshakes isn't guaranteed. Beyond the money, Sora is becoming a legal and PR nightmare. Between deepfakes of public figures and the flood of AI-generated Mario clip, the policing of it became much more work and more than the product was actually worth. Sam Altman is framing this as trimming the fat of the company. OpenAI is refocusing all its massive computing power away from cool video demos and towards automated researchers, and a new robotics focus model codenamed Spud. Essentially, they're trading the ability to make a video of a dog in a tuxedo for the ability to build a robot that can fold your laundry. And if you've been using this tool, you have until April 26th to export your library. And if you need a replacement, there's other AI video generating platforms like Kling and Runway, and which are aggressively trying to attract Sora's old customers. If you heard a distant roar on Wednesday evening and felt the ground shake, that wasn't Edgar's pickup truck. That was 8.8 million pounds of thrust, pushing humanity back towards the moon for the first time since 1972. At 6:35 Eastern Time on Wednesday, April 1st, the most powerful rocket ever built cleared the runway at Kennedy Space Center. The Orion spacecraft, which had a crew that was officially nicknamed Integrity. The 4-person crew is basically like your average astronaut, but they still had very unique traits. Commander Ray Whitson is the veteran and the steady hand. Pilot Victor Glover is making history as the first black person to head into the lunar vicinity. Mission Specialist Christina Koch, the first woman to leave Earth orbit. Mission Specialist Jeremy Hansen is going to be the first Canadian to venture into deep space. As of this morning, the crew has officially left the Earth. Yesterday, officially completed a translunar injection burn. They basically fired off their engines to break off from Earth's gravity, and now they're on their 4-day cruise towards the lunar far side. Right now, they're checking their life support systems and practicing manual piloting, just in case they need to steer the ship. And their schedule looks like around April 10th, they'll slingshot back towards Earth. And it'll be the first time that human eyes get to see the dark side of the moon for over 50 years. NASA isn't just visiting this time. The mission is to stress test for a permanent lunar base. If all goes well over the week, we're looking at a 2028 landing date for the first woman and person of color to land on the dusty moon. Also, on Wednesday, April 1st, SpaceX reportedly filed a confidential paperwork with the SEC for an IPO. People have been talking about a Starlink spinoff for years, but the rumors suggest that Musk is going to offer the whole thing. It isn't just a rocket company anymore. It's a vertical integrated titan of the 21st century. Because of its confidential filing, we're still in the information guessing phase. But the consensus among Goldman Sachs and Morgan Stanley is staggering. The target valuation is at $1.75 trillion. To put that in perspective, that would immediately make it more valuable than every company in the S&P 500 except for the big five, which include Nvidia, Apple, Microsoft, Alphabet, and Amazon. They're looking to pull in $75 billion. If that holds, it becomes the largest IPO in human history, absolutely dwarfing Saudi Aramco's $29 billion debut. They reportedly had a revenue of $16 billion in 2025, mostly on the back of Starlink's 9 million subscribers. But paying 100 times revenue sounds pretty insane until realize you're basically buying a monopoly of the orbital economy. So what are you actually getting from this IPO? You're not just getting Falcon 9, which is their rockets. The report allegedly includes XAIs, meaning that you get SpaceX, you're also buying Grok, the social media platform X, and the brain power of Musk AI Labs, which is all a tech frontier on every single thing, all packaged into one ticker. There's word that Musk wants to allocate 30% of the shares to retail investors. Usually the big banks hoard 90% of the IPO for the billionaire clients. If Musk opens 30% to the public, it's not just an IPO, it's a populist movement to support him and his company shooting for the stars. And true to form, Elon was on X this morning call with Bloomberg's report of a $2 trillion valuation and called it BS. But even at a $1.5 trillion valuation, we're witnessing the end of the private era for space exploration. There are also individual tickers putting on a whole show because of their volatility this week. Nike reported Q3 earnings this week, and despite beating expectations, the stock got absolutely wrecked, sliding 9.2% to an all-time low from 9 years. While they made money, their net income dropped 35%. With a mix of North American tariffs eating at their margins and the surprising slump of their direct sales, it turns out bypassing wholesalers isn't a good strategy if people aren't clicking buy on your app, and the brand is going from just do it to waiting and seeing. On the safety first AI company, Anthropic had a very human moment this week. They accidentally leaked their source code for Claude Code, which is their new engineering tool, via a package error. We're talking 500,000 lines of code and 2,000 files briefly exposed on GitHub. It wasn't the real brain of the model itself, but it revealed a blueprint for an always-on AI agent that they've been working on. And if you're a competitor, you basically got a free look at what they're doing in the background. While Boeing is trying to pivot, this week, securing a 7-year Pentagon deal with a triple production of their PAC-3 missile seekers. With the commercial side of Boeing being a mess, they're leaning hard into their defensive arm, and investors love the pivot, sending their stock higher as it breaks out of its 2026 slump, basically leaving that the long war that's going on, missiles are going to be in demand. On the other side, the House of Monopoly and Transformers is dealing with a villain. Hasbro confirmed a major cyber attack that crippled their internal systems. They've warned that recovery could take several weeks. With supply chains already fragile, a week-long blackout could mean empty shelves for the summer season. This stock is feeling the pain from that hack, sliding down as investors weigh in the cost of the cleanup. And while everyone is cleaning up their mess, Morgan Stanley is doubling down on Mark Zuckerberg. Analyst Brian Nork just named Meta as the top pick for 2026 and even setting a price target of $775. They believe the market overcorrected on ad spend fears. Meta is pouring $10 billion into a new El Paso AI data center. The smart money is betting that AI will be the next massive revenue for them. And that's about it for this week. We'll see if SpaceX can live up to that $1.5 trillion valuation when they file their S1 and finally hit the light. Thank you for listening. Until next time.